Hey everyone, I just got out of a really interesting meeting where I was explaining to a client some of the components of equity return, and I thought I'd share it with you because it does help put a lot of what's going on today into context. So there are three things that really, when you break down returns, whether they're good or bad, you can attribute them to. First one is changes, triangle stands for changes, in earnings, or EPS, earnings per share. This makes pretty intuitive sense. So when you are buying a company, as it earns more shares, that does help boost the return of the stock. Now the second one, reinvested dividends. It's a lot to write there. Reinvested dividends. So this can actually be share buybacks, or it can be truly the dividends that are then reinvested into your company. So if we just take the S&P 500, for example, and only looked at returns of price, it really does miss out on the total return that you as an investor earn. So we can look at changes in earnings, changes in return as a result of reinvesting dividends or having share buybacks. And the third one, this one's the most important. It's also the one that's the most uncertain. Changes in valuation. This one has often the greatest impact. And it's so uncertain because valuation is really a measure both of calculus and psychology, where investors are trying to predict future cash flows of any given investment, and that's how they decide what an investment is worth today. Now, there is a lot of math behind that, but confidence can cause investors, the same investors, to pay more or less for a given investment on a different day. So in a week like this where the market's been selling quite hard, there probably could be some changes in earnings down the pike if the entire globe is dealing with an illness where people can't go to work, or companies can't produce goods, or people are not going out and buying something, or there's less confidence in the economy and so companies are investing less in their businesses. That might lead to a reduction in earnings. So that's one piece of it. Reinvested dividends probably playing a very small role in today's returns and the returns that we'll see in the very near future. Changes in valuation. Again, this is the biggie, and there's a lot of uncertainty. For example, with the coronavirus, if we knew definitively when it'd be contained and when the cases would start dwindling and when people would be cured and become better, that would create a lot more certainty in predicting what the valuation of a company is. So I do think it's important to remember in any market case, these are the three things driving returns. And when you see market prices moving, that's really just the millions of market participants making an estimate on the future cash flows of an investment based on what's known today. Going into this week, we were aware that the coronavirus was a thing, but we are now seeing a repricing of investments based on the spread of this virus being greater. Now, past epidemics have typically been short-lived in terms of their impact on the market, but I think that this provides a useful framework. I hope you enjoy this video. Thanks so much for watching.